Now, taking stock of the recovery, we got two different views. Perhaps Michael Williams of Genesis Asset Management, who has said that the future is going to be brighter than we anticipate and that the third quarter is going to be just fine. Also, we've got Stephen Wood, Russell Investments. He says it's going to be a long, slow slog. And don't look at the broader market. He says, look at specific stocks, specific companies that will do well in a slow growth environment. Gentlemen, welcome to the program. Mike, Stephen. All right, let's talk about third quarter earnings. Last time we went through the whole earnings scenario, right, there was no top-line growth. It was all bottom-line expectations that were met or exceeded. Why? Because of cost cuts as well as, you know, fewer stock, a lot of stock buybacks that happened in previous years. What do you think for the third quarter, Stephen?
Well, I think we're transitioning on two fronts. One is from a recessionary environment that's global in nature to a slow growth but positive growth environment in the U.S., core Europe, and certainly in Asia. The second transition is going to be a transition from that earnings-driven story into a revenue story as we go into 2010. So I think, as I said, I think the growth will be tepid, and we've got 7 million people that have been unemployed since the beginning of the recession, which speaks to the cost cutting and the reevaluation of business models. So the ability to control the bottom line, but there's no fig leaf on the top line. And I think that's really going to separate a lot more companies. And I think the market is going to begin to discriminate more actively based upon sales going into 2010. So the broader market, like I said, I'm more interested in those names that can actually drive sales.
I like that. No fig leaf on the top line. All right, Mike, what about you? You know, you talked about Armageddon seems to have lost its, well, no one even talks about Armageddon right anymore. So what do you think is going to happen in the third quarter?
Right. I think third quarter is going to continue to surprise. Analysts are, as you might expect, shy or gun shy, and they're not going to project.
Well, I'm just curious, why do you think they're so gun shy? I mean, is this because they don't want to be really wrong again?
Well, after you've been burned, you don't want to be wrong again. But that's normal after every shock in the system. If you look, no matter what year you pick that we had a shock, every time we do have one, it is normal occurrence for 3 or 4 quarters after it's actually starting to improve for them to stay back on their heels. They're not going to be embarrassed by that again. I think what we're going to find is Q4 is going to be the first real year-over-year comparison where it's post Armageddon.
They're going to look really great. I mean, talk about the whole idea of comps, because it seems as though no one really looks at absolute numbers, right? I mean, it's just about comparison. Let's find the worst year we've had, compare them, it's all going to look great, right?
Right. It's going to look substantially better than we're prepared for. When you add that to the idea that banks, strangely enough, the thing that caused them to dismantle their financial statements, you've got the ABX index coming up. You've got those debts recovering, which means the value and the risk capital is returning to the market. Surprises are going to come just as, on the positive side, just as negatives surprised us before.
But you've also got comps on the GDP side, and something we're looking at as well is you had a drawdown, whether it's on cost side, but also on inventory side. So massive ahistoric drawdown of basically everything. You know, on the output side, basically, you know, whatever you make,
everyone hit the stop button, right? They just stopped spending.
Yeah, whatever you made, there was too much of that, and that was a global phenomenon. And you've seen that inventory drawing down. So I think third quarter, maybe even fourth quarter going into first, you're going to see a massive inventory kicker that's going to take place globally. I would just take that with a bit of grain of salt, that the numbers might even come in a little bit better shorter term as we settle into that more tepid growth as we go into the second half of 2010.
But I'm just curious, if we get that, I mean, if we get this outsized earnings result, does the market then go higher, or do people take a look at that and say, hey, this is an opportunity to sell off?
Well, one thing you got to realize, Pimm, and this is happening faster and faster as time goes on, we reach a consensus very quickly. The markets tend to fool consensus, to the good side or the bad side. The surprise today is that we recover normally. That would be the surprise, because everybody is suggesting we're going to recover very slowly and very tepidly, and it's going to be very dangerous curves ahead. That's probably the case, but the surprise is now what you have to pay attention to, because the out of left field event is that this event goes away almost as quickly as it arrived, strangely enough.